This is an alert I sent out to all of our students telling them I was going long on the dollar Canada. This is an email from one of our students, Brian, who banked in almost 1,000 pips on this trade setup. And this is the dollar Canada right now. I don't say any of this to boast. Yes, this was a great trade, but just like any other professional trader, I have winning trades and I have losing trades. I want to show you this instead to prove to you how powerful what I'm going to show you in this video really is. What I'm going to show you in this video can be a saving grace to your trading. It can mean the difference between profits and frustrating losses. It is a time-tested technique that will continue to provide profits for years to come if used correctly. You saw what it just did on the dollar Canada, and that's why in today's video I want to teach you how to master the pullback trade. Let's go. So first off, I'm going to do a quick overview of exactly what you're going to learn throughout this entire video. First, we're going to talk about what a pullback is and what are the types of pullbacks you need to understand. There are actually 3 different types of pullbacks we're going to discuss today that you must understand in order to master the pullback trade. Next, we're going to go over what each of these 3 types actually mean in terms of what the market's likely to do after they occur. And once you understand these pullbacks and what's likely to happen after they occur, I'm going to go through a full breakdown of the dollar Canada trade and see if you can spot what type of pullback we used in order to take advantage of that opportunity. And throughout that process, I'm going to show you how you can use what you've learned in this video and what you're going to learn in this video to spot big opportunities in the market, just like that dollar Canada trade. Once we're through reviewing the dollar Canada trade, I'm going to teach you exactly how to trade each of these different pullback setups. And at the end of the video, I'm going to give you a 4th pullback bonus that you really need to look out for in a trending market. So stick around to the end of the video for that. And right now, right before we get started with the actual content, go ahead and click that subscribe button if you're interested in learning more about Forex. Click that like button for me to help with the YouTube algorithm, and follow us over on Instagram where we post each and every week. So now let's dive into today's content. So to start off with, what is a pullback? A pullback is a period of exhaustion in a trending market. If you see a market that is trending, the pullback would be the area where the market starts to fall back down after having a big trending move. The reason for these pullbacks a lot of times is because of the fact that traders that were in down here have decided this is a level they want to take profit. They're not sure if the value of this specific currency pair is actually going to head higher, so they go ahead and take their profit off. A lot of times this is caused by structure levels looking left or different types of economical events. I personally don't trade fundamentals, so that has nothing to do with what I'm looking at, but what you need to understand is that a pullback is a period of exhaustion in a trending market. So as you can see, looking at this trending market, we have pullbacks that come in all different shapes and sizes. So let's now go into the different types of pullbacks. To do that, I'm going to go up to a blank chart and show you what we have here. What we have in any trending market is going to be 3 different types of pullbacks. The different types of pullbacks are: 1 is going to be a small pullback, 2 is going to be a medium pullback, and 3 is going to be a deep retracement. Now, with a small pullback, this is normally a sign of a very strong trend. A very strong trend is going to have very small pullbacks, very small periods of exhaustion before the next impulsive move. And if we have a medium-sized pullback, and in terms of what we look for in a strong trending move for the pullback, this pullback normally does not make it to the previous resistance level. That's how I define a small pullback. A small pullback is one that doesn't make it back down to the previous resistance level. And for a medium pullback, which would be this one right here, a medium pullback is going to be somewhere between a 50% retracement and around a 70% retracement, and normally comes right into the previous level of resistance that was broken in an uptrend. So that would be a medium pullback. Now, a deep retracement is going to be a pullback that is between 80% of the swing low to swing high and actually touching between 80 and 100%, meaning it's touching the previous level of support. And wow, this, in fact, is a sign of weakness in a trending market. It can also make for some great opportunities in terms of risk reward, which is something we're going to discuss as well. For these deep retracements, I want you to think of this, and the way I think of this is it's a last stand level. It's somewhere that buyers have their last opportunity to cause this market to continue, because if this level fails, more often than not, the trend ends up reversing. So this is our last chance level. What I like to do in these areas is give myself a really good risk reward ratio, but that's something we're going to discuss a little later in the video. At this point, you know what the different types of pullbacks are, and you've seen what they look like when we're drawing lines. But what I want to do now is show you the different types of pullbacks actually on a chart in live data. Then we're going to go over to the dollar Canada trade. I'm going to get you to tell me if you can spot what type of pullback we used in order to get involved in that opportunity, and then break down that entire trade so you can understand how to spot opportunities just like the dollar Canada trade in your own trading as well. So let's go ahead and delete these drawings and head down to a chart. So here on the dollar Canada chart, we actually have a push up here followed by a retracement and the next push up. Now we're in a trend. What type of pullback is this right here? Well, we don't quite come down to the previous resistance level. So in this case, for this specific pullback, this would be considered a small pullback for me, meaning we're in a very strong trend that's likely to head higher if we break above our previous resistance level. So with that being the case, you can see these small pullbacks and understand that it means we're likely to head higher if we're in an uptrend. Same thing if we're in a downtrend, but in the opposite direction. Now, what is this pullback considered? We have our next impulsive move that breaks and closes above our previous resistance level. And this pullback is about 50% of this impulsive move and comes down into our previous resistance level. So with that being the case, what would this be considered? Well, I personally would consider this a medium pullback. Medium pullbacks are a sign of a strong trend, remember? Meaning that these medium pullbacks, if they head higher, are also likely to continue the trend. So we have a medium pullback. Now, let's find a deep retracement as well. And right now, guys, I understand that these are just facts and you're just learning about pullback trades right now and pullbacks in general, but I promise I'm going to show you actually how to use this in your trading. I'm going to give you some practical application for this in just a second, a little later on in the video. But right here, let's talk about this deep retracement. What we have is a trending market here on the dollar Canada. This right here would be our medium pullback, followed by an impulsive move up, a small pullback, followed by another trending move. And then what do we have right here? Is this between 80 and 100%? This pullback right here is what I'm talking about. This pullback actually comes down into the previous support level, meaning that it is a deep retracement. On these deep retracements, what I really enjoy doing is giving myself a really high risk to reward ratio on these specific trades. Now, again, this is a sign of a weakening trend, but as this level is the last stand level, if it holds, if we have buying pressure and this level holds, a lot of times buyers or sellers at this level will give up. When they give up, the buying pressure can take over and push the market much, much higher. So that's what we actually use in the dollar Canada trade, and that's what I'm going to do right now. Now that you have an understanding and you see what each of these pullbacks look like, let's head over to the dollar Canada, see if you can spot the actual pullback that we used in order to take advantage of that trade. Let's do that right now. And here we are on that dollar Canada trade, and I kind of gave this away on the deep retracement lesson that we just talked about, because right here is actually the same place. So I'm sure at this point you can tell that this was based on a deep retracement pullback trade. Now, again, I'm going to go over this. We have our 1, 2, 3 move putting us into trend. We have our pullback, small pullback, followed by a nice impulsive move and a pullback back into the previous support level. Again, same thing we just discussed. If this previous support level holds, it's our last stand level, and if sellers can't make it through that last stand level, more often than not, they give up. And if they're going to give up, that leaves a lot of room for buying pressure to push the market higher, which is what we took advantage of here on the dollar Canada. Now, I know that this trade would not have been nearly as big of a winner if we hadn't had some type of big news catalyst, in this case being the coronavirus. But this is still the same type of setup we look for, even if there's no news events coming out and no catalyst. It still tends to provide an edge over the market. So in this case, we were waiting on the dollar Canada to give us a trending market, give us a deep retracement, and on this deep retracement, it's very important that I see buying pressure. Buying pressure came in from this swing low candle, having a long wick to the bottom side. Then we get a retest of that level, and the market holds. That's enough signal for me to see a deep retracement, understand I'm getting a nice risk to reward ratio out of it, which is important. We're going to discuss that in just a second, and use that level, the previous level, the last stand level, as a place to put my stops under while getting a nice risk to reward. Initially looking at a reward maybe up here at the previous highs is what I would normally do. So with that being the case, you give yourself a nice risk to reward opportunity. And here on the dollar Canada, that's what ended up happening. And we ended up taking the second part of that trade, the second part of that position, up much, much higher. And as you saw from the email earlier, Brian ended up taking this trade to whole new levels. It was one of the best trades he said he has ever had. And in just a second, I'm going to talk you through how to trade deep retracements like what we just saw on the dollar Canada. I'm going to talk you through how to trade medium retracements and how I trade those smaller retracements as well, the systematic approach I approach each of those with. But before I do that, if you would like to learn the exact rules-based strategy that Brian used in order to capture that dollar Canada trade and that I use in my personal trading every single day, and also get 3 to 5 email alerts from me and be personally mentored by me through your trading journey, then we've just opened up enrollment into the EAP training program. And in that program, you'll have a full training course that will teach you all about the strategies and techniques that I use, and also those 3 to 5 email alerts each and every week of trades I'm placing. Right now, we've just reopened enrollment, and there's a $200 discount on that program at the moment. So if you're interested in some more advanced training in the Forex market, that link is in the top of the description. This is not a sales pitch. I'm just trying to make you aware that it's there if you're interested in some more advanced training. If not, what we're going to do right now is dive into how to actually trade each one of these pullbacks. So let's go ahead and go into that right now. All right, so first up, let's go over the small pullback and how I actually like to trade this type of pullback. So for a small pullback, remember we discussed that a strong trending market will have pullbacks, but they will be smaller. So let's say we have a strong trending market, which is important to remember throughout this lesson, this part of the lesson. So remember, strong trends, volatile markets. We have our small pullback. This is the way I like to trade a situation like this. We don't know whether this pullback is going to be small or big until we break above this previous resistance level right here. So for that reason, I trade breakouts when small pullbacks occur. Let me explain that. I need a large impulsive move. We're going to go down to charts. I'm going to explain how to spot these big moves, so don't worry. After I see a really big move in the market, again, I like trading breakouts after these little retracements. So this little retracement may occur. Let's say we have this big pullback. Here's our previous level of support or resistance, and this pullback doesn't make it there, so therefore it's qualified as or validated as a small pullback. At that point, I'm going to put a buy stop order, and I'll go over that order to help with anyone who doesn't know what it is. A buy stop order above that resistance level, because in situations where the market is very volatile and trending with huge moves, then after these small pullbacks, if we get a break above this resistance level, the market tends to head much, much higher because it's moving so volatile. Now, in this case, you have a few different options for stops and targets. And we're going to go down on a chart and actually discuss this as well to give you a clearer picture. But right now, I'm going to do it right here with the drawing tool. So we have our buy stop order right here, let's say. And one of the options for a stop loss that I personally use, this is exactly how I personally look at these situations in terms of pullbacks. Whenever I see this happen and I place my order, I may decide to put a stop loss below the swing low before that breakout. In that case, and listen closely, you need to understand that. In this case, with my stop loss below that swing low, I look for a smaller risk to reward. So in this case, my risk to reward may be something like a 1.2 to 1, which would be closer to like up here. So it may be like a 1.2 to 1 risk reward in the case where I put my stop loss below the swing low. The second option is putting a stop loss below the entry candle. Those are the two different ways I like to play stop losses. And the reason I do the entry candle is because these breakouts are meant to push the market super high, right? Super high, super quickly. So if the market's going to go down at all, I don't want any part of it. I was wrong. Get me out of the trade for my small loss. But if the market continues up, that stop loss below the entry candle gives me an opportunity for a bigger risk to reward ratio. Let's look at what that looks like on an actual chart right now. So let's go down to some charts and I'll take you through one of these opportunities. Okay, so I want to see if you can spot the small pullback trades that we just discussed here on the chart. Give it a shot. I'll give you a few seconds. Have you found any yet? There's actually two that I want to point out and show you here on this chart. The first one is right here. This is classified as a small pullback, and the reason is because we have our move up that breaks and closes above our previous resistance level, right? After that move up, what we're looking for, as we discussed earlier, for a medium pullback, we needed to get about 50% of the way, 50% of the total move. So easy way to do that is with a Fibonacci retracement from our swing low up to our swing high. Did this retracement hit a 50% retracement? It did not. So with that being the case, something you may decide to do is place your entry above our previous swing high. Again, with the stop loss, we want to go below our, depends on what type of stop loss you're going to use. Let's just say we did it below the swing low here. And when I say swing low, it's this one, because after our break and close above, this was our swing low before our breakout, which is what we're looking for stop losses. So there's our stop. And in this case, I don't even have to put a target on the screen, but as you can see, this would have hit much more than a 1.2 to 1 risk reward, which is the preferred targets that I have. So another situation here that could have came out of this is you could have put stop losses below your entry candle, which may have looked something like, let's say what the ATR is, 33 pips. 33 pips below the entry candle would have put us about right here. And in this case, you have a much smaller stop loss and your targets could be at the same place and you would still end up with a much bigger risk to reward ratio. For instance, let's do this really quickly, and then we're going to go over one more small pullback trade that I want to show you, and then we will dive into the rest of the types of pullbacks, the medium and the deep retracements. So let's say you do under your swing low here, and we do a 1.2 to 1 risk reward. Okay, with a 1.2 to 1 risk reward, we can see that we hit targets if our stop loss was below the swing low before the breakout. Now, if we do a stop loss 1 ATR below our entry candle, what we end up with is this stop loss at our red line right here. And what that does, even if we keep the target at the same exact spot, what that does is increases our risk reward from, let's go back down, from a 1.2, obviously, that's what we were talking about, to a 2.2. Giving us a much better risk to reward ratio, which is why I vary in the way that I place stops on this particular type of trade. Now, let's see if you can spot the next trading opportunity in terms of a small pullback. If we have our impulsive move up and we do this pullback right here, is this considered a small pullback in a trending market? The answer is yes. So, small pullback because we don't even come down to our previous resistance, and it's obviously not all the way down to a 50% retracement. So with that being the case, we have a small pullback. We would have our entry above that small pullback. We'd have a stop loss, if you do the first way, below our swing low here. And we would have targets at a 1.2 to 1 risk reward. Let's do that. Stop loss here. Targets at a 1.2. And we clip our targets, but barely. So really, there's no way of knowing if this would have been a winning trade. It may have been a losing trade, which happens. It's totally fine. You're going to have losing trades at times. So in this case, right here, it looks like we would have been clipped here, but we may have been slipped on that position. In any case, this is a good setup for a small pullback trade. So this small pullback breakout trade would have ended up like this, but if you would have chosen to take stops in the other take stops the second way, which would be below our entry candle right here by 1 ATR, 32 pips. 32 pips would have been a little bit higher, and you could have kept the same targets, ended up with a 1.3 instead of a 1.2. So that's always, or more often than not, going to give you a better risk to reward ratio when using that second way of doing stops. Now, something important to note here about this small pullback breakout type strategy or type philosophy in trading is you only want to trade these during very volatile trends, very volatile markets that are moving a lot with some type of catalyst preferred, such as the coronavirus. That is a catalyst that pushes markets around in a very volatile way. Because of that, you have the opportunity to make extreme amounts of money using breakout patterns like the small pullback breakout. Now, let me go back to the drawing board here and talk you through trading strategies and the actual entry techniques that I like to use for medium and deep retracements. And actually, I just noticed that this video is extremely long. This video is nearly 20 minutes long already. I hate doing videos on YouTube that are over 20 minutes long. So for that reason, what I'm going to do is put a link in the description for another part of this video for those of you who are interested in learning and seeing the medium and the medium and the deep retracement strategies that I like to use, kind of like the same strategy that I used on the dollar Canada. For those of you who would like to see that, there's also going to be a link in the description titled Pullback Mastery Lesson. It's going to be a completely free video, just an extension of this one to keep the YouTube video from being super long. So go to that link, put your email address in, and I will send you that video, a link to that video, so you can watch that and take advantage of not only the small pullback breakouts like this, which will probably be a very good tactic to try during coronavirus, during any volatile market. And before you try it, be sure to backtest it. I have plenty of videos on that. I don't feel like going into it in this video because, again, it's already super long. You have to backtest it, create a trading plan around it. You can't go just blindly start trading this. You're likely to lose money if you do. So don't go blindly trade it. Test it on a certain currency pair and then decide whether or not you want to trade it. But for now, this type of trading strategy is going to work really well in a volatile market. To see the medium and deep retracements, the link is in the description. If you want those strategies, entry techniques, and stop and target preferences that I have. If you enjoyed the video, click the like button. Don't forget that if you want some really advanced training and to be personally mentored by me during your trading career, the EAP training program is linked in the description as well. Stay safe during these volatile markets. Keep your risk management in check. I hope you are able to trade green and capture some of these huge moves. I wish you the best of luck in all your future trades, and I can't wait to talk to you in the next video or in the video in the description.